Hello and welcome to simplerstocks.com. My name is Don Kaufman. I am going to kind of review the week at large with you. Let's kind of kick it off. There's a few products that I've been looking at quite substantially. I've talked about a little bit last Friday. I'm going to talk about it this Friday. And of course, moving forward throughout the course of next week. Of course, today being June 5th, next week kind of kicking it off on there on June 8th. First and foremost, I do like to look at the volatility, and I always like to kick off, looking kind of ahead for a moment. Volatility next week actually depicting the next 7 days. And of course, that does include the weekend, but ultimately it's just Monday through Friday market action. We're looking as much as about a $31 expected move. And that is according to the SPX. So ultimately, if you take a look at the S&Ps, okay, they're expecting about a $31 move plus or minus for next week. Now that is a 68% probability. This is a 1 standard deviation move. Okay, on kind of the outside, a 2 standard deviation move, you'd be looking more like a $60, $62 move in that neighborhood. Now, to kind of compare, how was that, for instance, last week? When I say last week, we can actually go back and we can take a look, how effective was the expected move last week. And so here we're looking at yesterday's, date, okay? But let's go ahead and let's actually back up a few trading days. In fact, in this case, I'll even go back to last Friday when we kind of discussed this a little bit. Let's go over here to May 29th and load up the expected move. And there it is. And again, we are looking at back data. This is end of day data. The market last week on Friday expected about a $32 move. Well, how did that work out in the SPX? Okay, so let's actually take a quick glance over here at the SPX. Was expecting about a $32 move, and we have 1, 2, 3, 4, 5 full trading days over here. We were pretty much at a range from about 2120, okay, down to about what? 2086. I don't know about you, but I'd say it was dead on. I mean, and that's the kind of thing that markets are fairly sharp. And when I say markets are fairly sharp, like when you look at these expected moves, this isn't just some like random calculation. This is taking option pricing, and the option pricing is pulled together by markets. Markets there's people bidding and offering on the options over here, and there's tens of thousands of contracts trading. And when I say tens of thousands of contracts, I literally mean tens of thousands of contracts. We'll look at some of the volume. Look at this, tens of thousands of contracts bid and offered on these options, and it pulls pricing into alignment. And the pricing itself really dictates this expected move over here. So last week, again, and there's the bell coming into, of course, the close, this Friday's close, the S&P's down, some $8. But what's incredibly, important to me is not just what we moved over the last week, but what are we planning to move next week? And is it always, dead accurate? Absolutely not. Sometimes you move 2 standard deviations, but you got to know what kind of risk is on the table at the week ahead. So with that kind of a review of markets here, albeit briefly, what do the markets do really in the last 5 trading days? They've been down, not massively over here, but definitely down. The markets did slip. Again, we saw a high on the week of about 2120. The low, okay, the low was all the way down here in the S&Ps to 2083, but we're actually closing here at about 2092 inside of the SPX over there, so we are definitely below, specific to the S&P futures, we're below the 2100 level in the S&P futures. But let's look at a few of the positions that I personally had talked about last week and a few of the positions we had considered getting into. Okay, some of my orders are expiring right now. Apparently I didn't fill. So let's kick it off with a few quick looks. One of the products that I was looking at was EEM. I've been bearish on EEM, and I kind of continued this stance, but we're going to take a quick glance over here at EEM. How did we do since ultimately the last 5 trading days? There's 1, 2, 3, 4, okay, 5. All right, we still kind of initiated a bearish position a while back on EEM. The slide continues. This has been really effective. So again, if you tuned in last Friday, I talked about EEM. Considered it to continue to slide over here. I would say at this point, okay, you can see a little bit more slippage on EEM, but most of the downside activity has already occurred. Again, most of the downside activity in this particular circumstance has kind of already occurred. I was kind of laughing about this because it looked like a head and shoulders pattern. You guys have heard me before. I'm not much of a market technician over here, but EEM continued to slide. At some point, if you're in this position, you got to consider closing it. I mean, you've had just ridiculous downside. I've been talking about this for the last 2 weeks. So EEM again continuing to slide. Nice position over there. Another one. Let's go to an individual product over here. We're going to take a quick glance over at Tesla. Tesla, I've been bearish on it. Okay, it has not really played out. There's 1, 2, 3, 4, 5 trading days. Yeah, it's down, but listen, I don't claim victory on this, not at all. I need Tesla to continue to slide down. This is one where you really want to consider if you're going to do it. Trade options on it. I mean, again, yes, this is simplerstocks.com, but the options are going to define your risk. Incredibly low IV percentile on it. Again, bearish on Tesla, and I'm going to reiterate that stance for the week ahead. I'd be much more comfortable using some type of a spread on Tesla over there. Here's one where we are absolutely wrong on, but here is TLT. Okay, so right now we're 2 out of 3 in TLT. I've actually been bullish in TLT. I did expect TLT to back off a little bit. It's backed off a lot more than I had anticipated. I'm still bullish on TLT, and I want to reiterate that stance over there. I'm bullish on TLT right now after getting absolutely smacked, okay, over the last few trading sessions. Again, we even talked about how I expected it to kind of back off before ripping higher. I would expect, again, TLT could rip quite a bit higher over there. Kind of continuing on the way with TLT, the implied volatility, it's getting up there. The IV ranking is all the way to 65%. That just means the risk is on the table out there. USO. What have I been in USO? Okay, well, I've got a number of bearish positions inside of USO, and that's actually some of the action that we saw this week. So again, kind of starting out the week relatively flat. USO actually peaks out here on Tuesday and comes back down. Now, it did pop. Again, it did pop a bit today. These are not staggeringly large moves, but the bearish position kind of continues to follow through on USO. I've got a trade in there, and that trade on USO, I got to close it out by next week, so I'm right in my wheelhouse of kind of where I want to be inside of USO. Now, in accordance with what we saw inside of oil, we'll move onward and upward over here. Let's take a quick glance over at Twitter. Okay, I've absolutely been bearish inside of Twitter. Okay, Twitter has really maintained relatively flat kind of across the board. I've even got like a really small position that I built inside of Twitter. The thing is down like a whopping $16. It's negligible. I'll actually reiterate that one as well. I have an options position built in Twitter. Okay, looking for Twitter just to break slightly lower over here. The stock, though, it's been dead. I mean, this week, neither victory nor defeat. It's just been completely dead. Twitter not seeing nearly the volatility it has lately. Can't get out of its own way. Moving on down the list, you guys know one of the stocks that I've been loving to hate. This is it's kind of one of my favorite ones to talk about this week has been Costco. I've been extremely bearish inside of Costco. This is a much longer duration position. This week, Costco getting absolutely smacked back. There's kind of the line in the sand I drew quite some time ago from the 143 level. We're well below it. You know, again, if you're in this Costco trade along with me, I'm going to be holding the position for quite some time, but you could actually find a bit of support right where we are. That's kind of where it stopped today, right here in that like 138 level. You could find some support. If it cracks through 138, it's good night, and I'll see you at 110. I'm actually going to be holding on to my Costco position. Again, I have a much longer duration outlook, though, on Costco. And last but definitely not least over here, I'd be remiss to not mention Microsoft. Okay, now inside of Microsoft. I've had a bearish position in Microsoft for quite some time. Microsoft has helped me out a little bit this week. This is not a substantial move down. Nevertheless, Microsoft slipping down as the week kind of progresses over here. Again, kind of stay tuned. I'm going to not only be updating these positions on a week-to-week basis over here, but we'll be looking to open up many new positions, okay, come next week. And please join us tomorrow for John Carter's class, simplerstocks.com/blueprint. Again, that's simplerstocks.com/blueprint. John is actually going to share everything. When I said the ultimate stock trading blueprint, there are many stocks that we look for appreciation in from time to time. But when we get larger market cap stocks, and when you think of larger market caps, you think of stocks like the Apples of the world there, that's hundreds of billions of dollars, or something like Alibaba, which only recently IPO'd, that's already hundreds of billions of dollars. And to see those stocks appreciate significantly is quite difficult, given the fact that their market cap is already so substantial. John's actually, one of his key lessons he's going to talk about in here is to find smaller market cap underlyings that have, okay, easier time of appreciating. For example, a company that might be like a $10 billion company, okay, has a much higher probability of going from $10 billion to a $20 billion market cap, whereas it's less likely when you get a $200 billion company, okay, turning to a $400 billion company. So one of the things that John is going to cover in extent, again, in the Ultimate Stock Trading Blueprint, is how to find smaller market caps, okay, billion-dollar companies, $2 billion companies, to look for explosive upside potential. Additionally, and I'll be involved quite a bit in this, the Ultimate Stock Trading Blueprint live trading session. So John, myself, and a few others are going to be heavily involved, of course, in the live trading portion of this, where, well, we're going to execute orders, and I'm going to actually talk a tremendous amount, again, about how to most effectively execute orders in markets out there. So again, join us for this this class. Should be a wonderful event over here. That's going to be Saturday, June 6th from 2 p.m. to 6 p.m. East Coast time over there. Again, the address over there is simplerstocks.com/blueprint. See you there. Have a good weekend. Bye-bye.